This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Hello, this is Hall Martin with Investor Connect. Today we're here with Alexander Borschow, managing partner at Semillero Partners. Semillero Partners is an early stage venture capital firm investing in purpose-driven, sustainable food and food tech companies. Alexander, thank you for joining us.
Thanks for having me, Hall. It's great to be here.
Great. Well, tell us more about your background before investing in early stage companies.
Yeah, so I guess my background, I was trained actually as a chemical biological engineer at MIT, so definitely not a traditional background for investing, but then I spent 6 years in banking at BNP Paribas learning about investments and more importantly, how to build long-term relationships, primarily with institutional clients. And it was a great experience, learned a lot, traveled, and the thing that I was most passionate about was food and sustainability and environmental conservation. And that's why I decided to go back and get my MBA at MIT Sloan, which had a really strong program in sustainability. That's when I started investing as an angel investor. And when I finished there, I was a director of finance at Italy. Got some great operational experience working with a fast-growing startup. And that's when I was invited to join as a founding partner for Semillero.
Great. And so what excites you right now?
So it's been really exciting to see the amount of interest globally from investors, from consumers, looking at sustainable food and food tech, how they can eat more sustainably. They want greater transparency, knowing where their food comes from, the rise in alternative proteins, everything from plant-based alternatives to cultivated meat to fermented meat. This is really driving a increased awareness and conversation about how our food and our food system impacts the world we live in. Because if you think about the food industry globally, it's responsible for about a third of global greenhouse gas emissions, and everyone's really aware these days about climate impact. And I'm actually excited that the food industry is front and center in how not only consumers but investors can be making an impact and driving dollars and awareness to things that can really move the needle. So that's what's really exciting me now.
Great. Well, you see a lot of startups and a lot of investors in your sector. What's your advice for people investing in sustainable startups? What do you tell them to do before they write that check?
Yeah, there's a lot of excitement, and I'll use the word hype a bit around valuations and funding rounds and this great PR. And what I would say, it's all about people, especially startups, right? You're investing in people that are going to be executing and leading, right? And unless you plan on stepping in and doing their job, you've got to really do a lot of diligence around people. And that means talking to former employers, former employees or people who reported to them, talking to not only customers, but also vendors and suppliers. And I would really recommend them on just looking for great people that are humble, coachable, but ambitious and with big vision. And we really talk about coachability as being a key factor when looking at people and how we evaluate people. And then the second thing is looking for great businesses that are really purpose-driven. And I say that because it's kind of an overused trope talking about a ambitious or passionate founder, right? The word passionate gets thrown around a lot. We think that purpose-driven founders and teams are really the ones that are going to be making the world a better place. And that's a key kind of check mark for us, because it's not just about trying to make a better flywheel. It's really about thinking about how we can improve the world for all stakeholders.
Great. And on the other side of that table, what's your advice for people running startups in the sustainable food tech area? What do you tell them to do before they go out to raise funding?
Yeah, so I'd say the number one thing is be authentic, right? Don't try to oversell. As an investor, we see a lot of pitches and a lot of hockey stick J-curve growth curves. The ones that I am most interested in are the ones who are more authentic and realistic and honest and sober about where they are, where they're going, and how they're going to get there. And also the ones that ask questions. They're not just trying to I recommend not trying to share and put as much information out on the page. I really like those entrepreneurs that ask questions and are curious and open, and really are thoughtful about the feedback that they get. So, in my world, an example is what kind of value you're creating. Really, it's not about getting your groceries in 50 minutes. That's not really making the world a better place. But how you're thinking about impacting the way food is produced, the way consumers experience their food, and the way consumers are educated about where their food comes from. So those are kind of the things that I advise founders and entrepreneurs to think about when they're communicating to investors.
Great. And so let's talk about the state of investing in food tech companies. What do you see happening here? How is the industry evolving?
2021 was really a breakout year on top of a breakout year. So we saw all-time highs in terms of investing in food and food tech. You saw, billions of dollars invested across early stage, and now you're seeing growth stage companies and even late stage companies. We're all familiar with Beyond Meat. Beyond Meat's IPO a couple of years ago really put plant-based alternatives on the map. There are hundreds of companies now that have seen that model be successful and are following in their footsteps, and that's really leading about the next wave of innovation in plant-based innovation. It's not just about making a burger; it's making about a crab cake or a shrimp alternative or a fish fillet alternative, and that's really where technology is really getting interesting in the innovation technology, changing the way that food is being produced. Now you have cultivated meat startups. You see huge innovation happening in Israel and Asia in how you can actually grow a muscle tissue in vitro, and it have 100% no growth hormones, no antibiotics, no pesticides. Right? It doesn't require millions of acres of land for feed. So it's a very interesting evolution in the way technology is being applied to food production. So I'm really excited about that. The digitalization of food as well has been a very interesting trend. It's bringing in other investors. You're seeing, SoftBank investing in vertical farming and ag tech startups like Plenty. I'm not going to comment on the valuations and the prices that are being paid in that space, which are definitely frothy. But it's just also broadening the types of investors that are invested. So now you see not only early stage VCs that are just dedicated focus to food and food tech, but you have more generalist VCs, your Bessemer Ventures and Khoslas and others who are seeing this as a largest global industries finally getting an injection of technology, and that's changing the pace of innovation in the space.
Great. And so what do you think is the biggest change we'll see in the short term, say 1 to 3 years?
Yeah, so I think 1 to 3 years, I think you're going to see more acquisitions in the space, because I'll talk about cultivated meat. Cultivated meat, I mentioned about meat that's grown in a petri dish or in a fermenter or reactor, right? Bioreactor. What you're seeing in the next 1 to 3 years is massive investment from established global meat companies, your Cargills, your ADMs, Archer Midland, your JBSs, right? And they're investing hundreds of millions of dollars into companies like Israel's Future Meat Technologies, because globally meat consumption, right, is rising as middle class rises, but consumers are becoming more and more aware of where their food comes from, and the global industrial production of meat is not a pretty industry, and it doesn't have a great footprint. So if you think about the long supply chains of having to grow feed, be it corn or soy in Brazil or the US, and then move it, process it over thousands of miles to then feedlots for cattle, and then have to process that and then move that meat to the end consumer all around the world. The future, right, is going to be about being able to produce 20, 30, 50% of that right in the same country, in the same city where those consumers are, with a tiny fraction of the footprint from a land footprint, a water footprint, and energy footprint. So I think the next 1 to 3 years, you're going to see a lot of money continue to be invested in cultivated meat for beef, pork, seafood, chicken, and that's something that's the biggest change we're going to see over the next couple of years.
Great. And so let's talk about your investment thesis. What exactly is it, and what's your criteria for making an investment?
Yeah. So our thesis is we're looking for purpose-driven entrepreneurs in the food and food tech industries that are really just not making products that are better for people, but for the planet. And when we talk about better for the planet, we really walk the walk. We really measure impact. And one of the easiest metrics is thinking about your carbon footprint, but also land use, water use, energy use. And what we look for, we're focused on early stage companies that are kind of around their Series A stage. They're doing a couple million in revenue, say, call it 2 to 15 million in revenue. And they're looking to grow to that next stage, right? And we're pretty selective in the companies we invest in. We're not high volume investors. We're more low volume, high touch investors. So we really look for building relationships with founders that value our input and our expertise and our partnership more than the capital that we're bringing on board. And that takes time to develop. So that means that, we don't have one intro call, maybe one follow up and then write a check. We tend to get to know companies and entrepreneurs over a period of many months, if not years. And that means getting to know them early. That means getting to know them when they're raising their seeds or pre-seed rounds, getting to see how they communicate with investors, how coachable are they, how curious and open are they, how many questions do they ask, or are they just asking, just sharing information. And when we look at companies, we're looking at companies that are going to be growing somewhere, their revenue somewhere around 10x over the next 3 to 5 years. That's kind of a good multiple. And it's very important to work with companies that we're aligned on the plan of that subsequent round of funding, because that's an important milestone of survivability and success in early stage companies. Is how do we make sure that we hit the milestones to make sure you get the capital you need for the next round of funding.
Great. And can you talk about one or two startups, perhaps a portfolio company that fit that thesis?
Yeah, I definitely can. So we invested in a company out of Colombia. We're actively looking at startups in Latin America called Robin Food. Robin Food is the largest cloud kitchen restaurant company in Latin America. They have operations in Colombia, Mexico, Brazil, and founded by previously successful entrepreneurs with exits in the food tech space and delivery space. And when we met Jose, the founder, we were introduced and we got to know them. We had a couple of conversations. More importantly, we saw that there was a consistent execution of what he said he was going to do. So when you think about the growth that he was expecting, the new stores that they were opening, right? He consistently communicated expectations in a realistic way and then met those expectations. And the mission of Robin Food was about making healthy, fresh food available and affordable to all. So that's a really interesting mission, because it's not just about being healthy and fresh for people, but also about using sustainable packaging, increasing the consumption of vegetables and plant-based foods in the diet. So, working together, we saw, okay, when we started, they were doing about 500-600K a month in revenue. In the last 7 months, they've doubled their monthly revenue to 1.3 million. And that's kind of the execution and growth that we like to see. And we consistently talk on every 2 to 3 weeks, catch up. And it's a good example where we invested initially in a safe note ahead of a financing, and then saw the execution, and then had capital reserve for follow-on and invested more capital in subsequent rounds.
Great. So there's lots of challenges in the food tech space. What are the main challenges you find startups face when they go out to run their business?
I would say the challenges in the space for startups in the food industry, there's a lot of excitement around anything that has a tech component, be it delivery or cultivated meat, and it pushes up I would say the valuations have been pushed up in that space, which a lot of investors have been chasing that, and it's a hot space to invest in. That has drawn the attention of investors away from some really good companies in other categories within the food industry. And it's consciously or unconsciously, they're benchmarked against a company that's raising a massive round and has huge growth revenues, even though they're highly unprofitable. So instant grocery delivery companies, I commend them for the way they have grown, but if you think about the fundamental business model, I'm not really sure how that is really going to work and scale, and I don't know what kind of impact it's having on the world. but they've commanded huge valuations and raised multiple rounds within 1 year, and it leaves the other startups in the space kind of being compared to that. So that's a challenge.
And then on the other side of that table, what's the challenge the investor faces in this sector?
Well, along the same lines of valuations being pushed up in interesting companies, don't chasing valuations, right? You want to be part of a company, but the truth is, as an early stage investor, investing $1, $2, $3, $5 million, and our sweet spot's really in the $2 to $5 million initial investment. You're not getting the same percentage equity when you're investing in a much higher valuation, right? So if you look at the return scenarios on a potential exit or whatnot, it's a different value proposition, because the economics have changed when you're investing $2 million and you were getting 10% of the company. Now you're looking at companies that are raising at a $80-100 million valuation. Instead of getting 10% of the company, you're getting anywhere between 2 and maybe 3.5%, 4% of the company. So it's a different equation. So that's been a challenge in certain spaces where we want to deploy capital, but just finding the right partner and the right price.
Great. Well, you see a lot of different sectors and applications in the food tech space. If you had to pick 1 or 2 opportunities that are good to pursue today, what would you call out?
One space that we deployed capital significantly from Fund 1 and now from Fund 2 is in the plant-based alternative space. We think that that is going to continue to be an interesting space, and really the next wave of innovation in that space. It's like I mentioned, it's not just about a burger that is made from plants that tastes almost similar to something that might be meat. It's about getting all those other form factors, sausages, links, crumbles, crab cakes, fish fillets, but also most importantly, getting the experience for the consumer to be identical or even better with a product that's actually healthier for them. So using whole plants, plant-based foods, not highly processed foods with a bunch of additives, but actually making it a healthier and better experience for the consumer. That's kind of innovation we're seeing. We call it version 2.0 and 3.0 in plant-based alternatives. And the other one I mentioned earlier is about cultivated meats. I think over the next 3 to 5 years, it's going to be a game changer. There's a lot of room to grow and a lot to come down the cost curves and also the scale of production. But you're already seeing having their cultivated chicken nuggets approved for the market in Singapore. Singapore has been a forward-thinking, innovative regulator and the first to approve a cultivated meat product in the market. You're going to see the US and Europe probably 12 to 18 months behind that. And that's another really exciting space that I see.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
So, from an investor perspective, we talked a lot about food and food tech and how excited we are about it and impact and sustainability. I wonder, what percentage of investors out there, be it family offices or institutions, actually have exposure to food and sustainable food in its industry. You think about it, it's a $7 trillion industry globally, but I would say that most investors don't have much exposure to it. And it's one of the ones that are changing most rapidly. And if there's one thing that we try to do at least 2, maybe 3, sometimes more times a day, it's eat food. So I think it's something that I think getting more exposure in portfolios to food is something that all investors should be thinking.
So how best for listeners to get back in touch with you?
Well, they can email me at alex@semilleropartners.com, and that's Semillero with 2 L's. That's the best way to get through to me. And then also happy if you log into our website, check our website, semilleropartners.com. There's a form for you to fill out as well.
Great. We'll include that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
It'll be my pleasure. Thanks so much for having me, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.